All right, let's dive right into what might be one of the biggest changes to money, well, ever. We're talking about central bank digital currencies, or CBDCs. The question is, are they the next logical step in finance, or are they a doorway to a level of control we've never seen before? Today, we're going to dig into the evidence. I want you to start with this one question, because it really cuts to the heart of this whole debate. Just take a second and imagine a world where every single transaction you make, from buying a coffee to paying your rent, is recorded on a government-run ledger. This isn't some far-off science fiction plot. It's the very real possibility we're talking about with CBDCs. You know, to really get what a CBDC is, we first have to remember what our money is right now. We use what's called fiat money. The dollar, the euro, the yen, none of it's backed by a vault full of gold anymore. Its value comes from just two things: the government saying it's worth something, and all of us trusting that it is. Okay, so a CBDC is basically the government taking that fiat money and creating a direct, official, digital version of it. Now, this is totally different from the money in your PayPal account or your online bank. That money is a liability of a commercial bank. A CBDC, though, it's a direct claim on the central bank itself. Think of it as state-issued digital cash.
So why is all this happening right now? Well, a huge part of the story is that physical cash is just fading away. If you go back to 2008, cash was king. According to UK Finance, a whopping 60% of all transactions were done with physical bills and coins. It was just how we did things.
But just look at this incredible shift. By last year, that 60% had fallen off a cliff, down to only 12%. And as physical cash, which is the only form of anonymous, state-backed money we have, vanishes from our lives, governments are starting to ask, okay, what's next? And for a lot of them, the answer they're looking at is a CBDC.
And look, they're making a pretty compelling case for it, at least on the surface. Proponents argue that a well-designed digital currency could solve some very real problems. So let's take a serious look at the official promise of CBDCs. Now, here's where things get really interesting. This idea of programmable money. Imagine you're a freelance graphic designer. Instead of sending an invoice and waiting a month to get paid, the money is automatically triggered and sent to your digital wallet the very second your client marks the project as complete. That's a huge boost in efficiency. And the arguments go way beyond that. Big global institutions like the IMF are pointing to a whole list of benefits. They say CBDCs could make payments way faster and cheaper. They could help people who don't have bank accounts, the unbanked, finally join the digital economy. And they could offer a safe, stable, government-backed alternative to the wild west of private crypto, all while giving central banks a powerful new tool to guide the economy. But all of that efficiency, all of that control, it comes with a potential dark side. And this is where the critics start sounding the alarm bells, loud and clear. This is where the dream of a digital utopia starts to look a lot more like a digital prison. The number one fear, the one that really gets people worried, is surveillance. A centrally controlled digital currency could give the government a complete bird's-eye view of every single purchase made by every single citizen. Critics say this would create a massive database revealing everything about you, where you go, what you buy, even who you associate with. And listen, this isn't just a fringe concern. We're talking about the OECD, the Organization for Economic Cooperation and Development, issuing this incredibly stark warning. They're using phrases like instrument of control, social profiling, and even human rights abuse. When a major mainstream organization like that talks this way, you have to sit up and pay attention. And the tool for that control is programmability, the very same feature we just talked about for efficiency, but it could easily be used to enforce rules on your own money. Imagine getting a stimulus payment that has an expiration date, a use it or lose it rule, or funds that can only be spent in a specific city, or, and this is the most chilling one, the power to block you from buying certain things like too much gasoline, or to instantly freeze your entire account if you're at a political protest. This quote really just says it all. The combination of total surveillance and total programmability is what some have called a Frankenstein scenario. It's the creation of what could be, quite literally, the most perfect surveillance system ever built.
So, what is it? A financial utopia or a digital dystopia? A tool for efficiency or a tool for control? Well, the deeper truth is, it could be either one. It's not a simple yes or no. The final outcome depends entirely, 100%, on how it's designed. It all comes down to the code.
So how would that work? Well, it basically comes down to two different models, two different philosophies. An account-based system is what it sounds like. Every digital dollar is tied to your specific identity in a central ledger. But a token-based system is different. It's designed to verify the digital token itself, not you, the user. All the system cares about is whether the digital coin is legit, kind of like how a cashier just needs to know your dollar bill isn't counterfeit. And let me be clear, the choice between these two paths is everything. One of them leads almost automatically towards surveillance and control. The other can be specifically designed to protect our privacy. The debate isn't really about the technology itself. It's about the values we decide to build into it.
So how could you actually build a privacy-focused digital currency? Well, the key idea is something called a bearer instrument. Physical cash is the perfect example. Whoever is holding the $20 bill owns it. There's no central database tracking who owns which specific bill. That's what gives cash its privacy.
A privacy-first model, which some people call e-cash, would basically copy that idea for the digital world. The money would live on your phone or a card, not in some central government account. You can make direct, peer-to-peer payments, even offline, without it going through a central server. And, this is the most important part, there'd be no massive central ledger recording the who, what, and where of every little thing you buy. So here's the crucial takeaway. A technological solution exists. We actually have the ability to create a state-backed digital currency that gives us the convenience of digital payments while protecting the privacy and anonymity we've always had with physical cash. It is possible. And this isn't some abstract debate for academics to have about the distant future. This is happening right now, all around the world, and the design choices being made today are going to define our financial lives for generations. Just look at the data. Right now, 134 countries that represent 98% of the entire global economy, are actively exploring a CBDC. 19 of the G20 nations are already in advanced stages, and 11 countries are already running pilot programs. The train, my friends, is already leaving the station. And this really hammers home the risk of getting the design wrong. The fear is we end up with some kind of hybrid monster, one that centralizes government control but also gives private companies access to the data, creating a surveillance machine more powerful than anything the government or private sector could build alone. Which brings us right back to the core idea of this whole explainer. A CBDC isn't inherently good or evil. It's a tool. The technology itself is neutral. But the values we choose to write into its source code, values like privacy or control, freedom or surveillance, those are not neutral at all. So as we stand here right on the edge of a revolution in money, this is the fundamental question we all need to start asking. Are we going to demand a digital future that protects the privacy we've always taken for granted with cash? Or are we going to quietly walk into a new era of unprecedented financial control? The choice is still ours to make.